Donald is 67. His state pension started 14 months ago. Last week, he came to Citizens Advice because his workplace pension had dropped by £140 a month and nobody had explained why. I asked to see his pension statement. His tax code was 1257L. It should not have been. HMRC had adjusted it or tried to, but something had gone wrong in the update. Donald had been underpaying tax for over a year. He was about to receive a bill for £1,960. He had no idea it was coming. Nobody at HMRC had rung to warn him. Nobody at his pension provider knew what was happening in the background. I spent 37 years inside the UK tax and financial system, most of that at HMRC. Since retiring, I have sat with over 1,000 people at PensionWise and Citizens Advice sessions, and this conversation, this exact confusion about tax codes and what happens the moment you turn 66, is one of the most common I have. HMRC changes your tax code when your state pension starts. They do not ring you. They do not send a letter explaining what they have done or why. The code just changes. And if it changes wrongly, or if it does not change at all, you either overpay or underpay for months without knowing it. The system assumes you are watching. Most people are not. Let me start with what a tax code actually is, because most people have never had it explained properly. A tax code is an instruction from HMRC to whoever pays you, your employer, your pension provider, telling them how much of your income to let through tax-free before they start deducting income tax. The numbers in the code represent your personal allowance divided by 10. So 1257L means you have a personal allowance of £12,570. That is the amount of income you can receive in a tax year without paying a penny of tax on it. If you are working or drawing a pension and you do not have a state pension yet, 1257L is exactly the code you should be on. It tells your provider to let the first £12,570 of your income pass through tax-free. Everything above that gets taxed at 20%, assuming you are a basic rate taxpayer. That is how it is supposed to work. And for most of your working life, that is how it does work. PAYE handles it in the background. Your employer or pension provider applies the code. The tax gets deducted. You never have to think about it. Then your state pension starts. And this is where the system changes in a way that catches almost everyone out. Your state pension is taxable income. Most people know that. What most people do not know is that it is paid gross. The DWP does not take any tax off at source. Every 4 weeks, your state pension lands in your bank account with nothing deducted. So the question becomes, how does HMRC collect the tax you owe on it? They do not send you a bill. They do not ring you. What they do is adjust your tax code on your other income. They take the amount of state pension you are receiving and subtract it from your personal allowance. Whatever is left becomes the tax-free allowance on your workplace pension or your SIPP drawdown. That is the mechanism. Here is the number that makes this real. The full new state pension for 2025 to 2026 is £11,973 a year. Your personal allowance is £12,570. The difference between them is £597. If you are receiving the full state pension, your tax code on your other income should drop to around 59L or 60L, depending on rounding. Not 1257L. That code assumes you still have your full personal allowance available. You do not. Your state pension has already used most of it. Take Donald again. His workplace pension is £9,200 a year. Before his state pension started, his code was 1257L. His entire workplace pension sat inside his personal allowance. He paid virtually no tax on it. Then his state pension started at the full rate of £11,973 a year. HMRC should have adjusted his code immediately to reflect the fact that his state pension was now using up £11,973 of his £12,570 allowance. His new code should have been around 60L, meaning only £600 of his workplace pension was tax-free. The rest, £8,600, should have been taxed at 20%. That works out to roughly £1,720 a year, about £143 a month. Instead, his code stayed at 1257L for 6 months. His provider kept treating the first £12,570 as tax-free. Donald was paying almost no tax at all on his workplace pension, which sounds good until you realize HMRC was going to notice eventually. And when they did, they would send him a bill for everything he had underpaid. Then HMRC caught up. The DWP data came through late. HMRC realized Donald had been underpaying since his state pension started. They sent him a simple assessment, a letter with reference PA 302, telling him he owed them £860 for the underpayment so far. Then they adjusted his code to 1L to claw back the rest over the following year. His workplace pension payment dropped suddenly by £210 a month. He rang his pension provider in a panic. They told him HMRC had sent a new code through. Nobody explained why it had happened or what the original error was. That is what happens when the code does not update on time, and it happens more often than you would think. HMRC gets the state pension figure from the DWP. The DWP feeds the data through at the start of the tax year, or when your state pension begins, whichever comes later. If the timing is off, if the data arrives late, if your state pension started mid-year and the systems have not synced properly, you end up on the wrong code. And the only way you find out is if you check the code yourself. The system does not send you a warning, it just waits for the reconciliation at the end of the year. By then, the damage is done. So here is what I want you to do right now. Find your most recent payslip or pension statement. Look for the tax code. It will be in the top corner, usually next to your national insurance number. It is a series of numbers followed by a letter, most commonly an L. Write it down. Now, if your state pension has not started yet, and your code is 1257L, that is correct. Leave it alone. But if your state pension started months ago, or even years ago, and your code still says 1257L, something has not updated. You are either underpaying, and HMRC will come after you for it later with a bill and interest, or you are overpaying, and they are quietly keeping the difference every single month. The most common wrong codes I see are these: 1257L, when it should have dropped to around 60L or lower. That is an underpayment waiting to happen. You are not paying enough tax right now, and HMRC will send you a bill when they catch up. A code like 60L or 130L, when your actual remaining allowance after state pension is different. That could be an overpayment or an underpayment, depending on the exact figure HMRC is using. You need to check it matches your actual state pension amount. ABR code, which stands for basic rate. That means every penny of your pension is being taxed at 20% with no allowance at all. That is almost always wrong unless you have multiple sources of income, and HMRC has deliberately split your allowance between them, giving you the full allowance on one source and a BR code on the others. If you only have one pension and it shows BR, that is a mistake. And finally, a K code, something like K500. That is rare, but it means HMRC thinks you owe more tax than your income covers, often because of state benefits, company perks, or an underpayment from a previous year they are clawing back. If you see a K code and you do not understand why it is there, ring them immediately and ask for a breakdown. Now here is the part most people do not realize. If you have been on the wrong code for months, HMRC does not automatically refund you. They do not write to say, "We have noticed an error, here is your money back." What happens instead is this. At the end of the tax year, HMRC runs a reconciliation. They compare what you actually earned to what you actually paid. If you underpaid, they send you a simple assessment telling you what you owe. If you overpaid, they send a P800, a tax calculation, sometimes with a check, sometimes with a note saying the refund will go straight into your account. But here is the thing. That 800 pesos only arrives if HMRC has all the right information. If your pension provider has not sent them the correct data, if the DWP figure is still wrong in the system, the reconciliation does not pick it up. You do not get the letter. The overpayment just sits there. I have sat with people at Citizens Advice who have been overpaying for 3 years and never received a single P800. Not because HMRC was being deliberately obstructive, but because the data in the system was incomplete. The reconciliation never flagged it. That is why you cannot wait for HMRC to notice. You have to check the code yourself. And if it is wrong, you have to tell them. The exact words I would use are these. Ring HMRC on 03002 003300. When you get through, say, "I have recently started receiving my state pension and I would like to check that my tax code on my workplace pension is correct. My current code is," and then read them the code on your statement. "Can you confirm whether that reflects the adjustment for my state pension?" That sentence does 2 things. It tells the agent you understand how the system works, which prompts them to take the query seriously, and it forces them to look at the actual figures in your record, not just confirm that a code exists. If the code is wrong, they will update it on the call. The new code will go through to your provider within a few days, and your next pension payment will reflect the correction. Most people I work with see the change on their next statement. Now, if you have been on the wrong code for months and you have been overpaying, you are owed a refund. HMRC will not send that automatically. You need to claim it. There are 3 forms depending on your situation. P55 if you have taken a one-off withdrawal from a pension and plan to take more this tax year. P50Z if you have emptied the pot completely and have no other taxable income. P53Z if you have emptied the pot but still have other income, like your state pension. All 3 are available through your personal tax account at gov.uk. HMRC's stated turnaround is 30 days. In practice, most people see the refund within 6 weeks. The figures shift quarter to quarter, but to give you a sense of scale, HMRC repaid £44.1 million to over 13,000 pensioners in just the first 3 months of this year. And that is only the people who knew to claim. The actual number of people overpaying is almost certainly higher. I meet them every week at Citizens Advice, people who have been on the wrong code for 18 months, 2 years, sometimes longer, and nobody told them they could get the money back. One thing to be very clear about, if HMRC finds that you have underpaid because your code was wrong, they can collect that underpayment by adjusting your code again. They will reduce your tax-free allowance even further to claw back what you owe over the next year. That can be a shock if you were not expecting it. Your pension payment drops suddenly, and the only explanation is another code change. If that happens to you, ring them, ask for a breakdown, and if the underpayment is large, you can ask to spread the repayment over a longer period. They do not always volunteer that option, but it exists. Most people I have helped have managed to negotiate spreading it over 2 or even 3 years instead of 1. Scottish taxpayers, one quick note. You are on the same system, but Scotland has its own income tax bands. Your code will have an S prefix, something like S1257L. The mechanism is identical. State pension paid gross, HMRC, adjusts your code. Your workplace pension carries the tax. But depending on your total income, you may be paying at the Scottish starter, basic, or intermediate rate. The numbers do not work out identically to England and Wales. If you are in Scotland and your code looks wrong, the same advice applies. Ring HMRC, ask them to walk through the figures, and do not assume the code is right just because it has an S on it. Now, there is one scenario that catches people more than any other. You reach state pension age. You claim your state pension. It starts being paid. But for some reason, the DWP data does not feed through to HMRC immediately. Your tax code does not change. You are still on 1257L. Your workplace pension provider is still treating your full personal allowance as available. You are paying almost no tax. Months go by. Then HMRC catches up. The DWP data comes through. HMRC realizes you have been underpaying since your state pension started. They send you a letter telling you that you owe them several £100, sometimes over 1,000. The system failed to update your code in real time, but HMRC still expects you to pay the shortfall. I sat with a man called Robert at a PensionWise session. His state pension had started in May. His tax code did not update until November. For 6 months, he underpaid by roughly £120 a month. When the simple assessment arrived in January, he owed £720. HMRC's position was clear. The tax was owed regardless. Robert paid it. But here is what he could have done, and what I am telling you to do now. The moment your state pension starts, check your tax code. Do not wait for a letter. Do not assume it will update automatically. Ring HMRC, give them your national insurance number, and ask them to confirm that your tax code reflects your state pension. If it does not, tell them to update it immediately. That one call prevents the underpayment from building up. One more thing about codes. If you have more than one source of income, a workplace pension and a private pension, or a pension and some part-time work, each one will have its own tax code. HMRC splits your personal allowance between them based on what they think you are earning from each source. It is entirely possible for one code to be correct and another to be wrong. Check all of them. Donald got his code corrected. HMRC agreed to spread the repayment over 2 years instead of 1, which softened the blow. His monthly payment is still lower than it was before his state pension started, but that is how the system is supposed to work. The state pension is taxable. HMRC collects the tax through your other income. Once the code is right, the system runs smoothly. What he could not quite let go of was that nobody had warned him in advance. And I think that is entirely fair. That is a reasonable thing to feel. I should say, I am a retired civil servant, not a regulated financial advisor. For your own situation, if it is complicated, PensionWise is the free government guidance service. But for something as straightforward as checking a tax code, you do not need an advisor. You need to know what you are looking for. Now you do. Take care.